Okay, hi there guys. Just let me know if you can hear me loud and clear. All systems should be go. Right, but we'll see. Hope we're doing well. Who's in at the moment? G'day, Helen. Bit of fun in the markets at the moment. Oh, it's still getting a bit of a belting at the moment. It's just the ASX. I think it's just trying to find some support. We'll talk about that. I had a bit of a topic. Yeah. G'day, Laurent. Finally broke down. That's right. I think it was always going to happen after going into all-time highs, and the way it rejected, it's sort of popped up, rejected back below the, was it 68.51, and just been heading down day after day. A bit of a go over that. I did have that topic talking about capital raisings only because of what happened to us on LCK. I thought it was interesting. Had a bit of a chat about that, but maybe the markets itself is taking precedence. So we'll see how we go, depending on how much we can get through today. I think we'll just focus on where the markets are at and what's pushing and what's driving them. G'day, Jane. Rather than getting on too much about, I think it's important just to touch on the capital raisings and what's pushing the markets around, but we'll see. All right. So Jane's all good to go. Nothing on Thursday, just to remind that. No stream on Thursday. We used to. I think everyone just got sick of me talking. Sick of hearing my voice. Isn't that right? And probably slurping at coffee. I've got one here, by the way. All right, now let's get stuck into it. Anyone that's new, welcome to TradeSetup, and thanks for joining us. If you do like what you see today, it'd be great if you can leave a like on the YouTube channel at the end of the video and share the word a bit, or spread the word. We have got our Twitter account. You'll see, I know everyone's probably seen this or heard me talk about it for quite a while, a few times now. Twitter's top left-hand corner, so join us on Twitter. Anything you like, feel free to, especially if there's something important, just send it to us and we can post that easy enough if it seems worthwhile. Also, there's bits and pieces we're watching throughout the day that we tend to like and post on Twitter. Facebook, it's just a repeat of Twitter, really. Bottom right-hand corner, though, join us or subscribe to us at TradeSetup. That's our YouTube channel. Now, let's get rid of that. If I can, I'll have to, there we go. And we'll start off with where the market's at. God, I just unfortunately getting the feeling that people are getting nervous. 86 points. I mean, we're probably due for more than a belting, more than a few points down sooner or later. It's just, I think, what it feels like, it just feels like the fear is starting to increase. We're getting to all-time highs. You've got to remember, when we tick over the all-time highs, the higher you get, who's going to want to buy it up there? Any sensible person. I mean, everyone says, a pullback is good. Now, no arguing that. The thing is, it's how far we're going to pull back and what sort of pullback. Just remember, this is when we sold down. This is the move. Let me just get up another chart. What am I on here? On end of day. So this was the move down back when we sold off. We ticked off into new highs back in here. That was in August. Those highs took them out in, what was it, just the end of August, closed below. So a bit like we did with the all-time highs. I'm not saying that that's exactly what's going to happen. Look for the sell-off, But it's the sell-off that's important, not how we sell off, not the actual fact that we're going to have a bit of a pullback. Now, this had a few days down as people were, I guess, starting to get a feel of the market, starting to realize potentially what could be happening. And then that sell-off accelerated, and that was on the 5th of September. And you could see pretty much a couple of days after that, bang, straight down. Now, not saying that that's going to happen, but that's what it feels like a bit. We've traded through the highs and backed off from the highs. So anyone that was potentially waiting for us to get new all-time highs, whether they were just buying, okay, once we tick in the all-time highs, we're off and racing. And there's a lot of people that will be sitting there watching that, and it's that sort of feeling that if you get there, it's going to keep going. And it's unfortunate that it's a lot of mums and dads, a lot of sort of retail trading that will wait there and wait to see once it gets in the all-time highs, they'll be sitting there going, okay, I've missed the boat this much, I'm going to jump in. Or they might have taken some up, closed it out here on a bit of a retracement, and then just finding it going on without them, adamant that, okay, cash is king, and then seeing it get up to the highs, going, bugger, if it gets up there, I'm in, I've got to have a piece of this market. And then sure enough, the market turns around and retraces. It's that theory. You've got to think of the market as a number. There's only a finite. There's not an infinite amount of players that can jump in to keep supporting higher prices. It's a finite amount of traders or people that are willing to jump in. The higher it gets, it just works on your psyche. The higher it gets, the less, in my opinion, the less likely there's people willing to jump in at the high, especially when you tick over into highs and you're sitting there going, well, if you weren't watching the market and you're getting in late, there's going to be a whole lot of people getting in late. They're going to be selling, potentially buying from people that are selling to them that started the trend or that got in nice and early and are happy to take some risk off and seeing this good move up. So there's going to be people that are going to be taking risk off when you get up there, and there's going to be people that be buying when you get up there. Now, it's just a numbers game to me. It's how many people are going to be taking risk off as opposed to jumping in. And I think the higher you get, the more people taking risk off, then there is jumping in and willing to support that market, support pullbacks. All in all, I mean, it's just the nature of the beast. And it's this today, the action today, I mean, we just ticked over, we just suddenly spiked down. All right, it was about 11:15, I think. You can see the Aussie, well, we can show you here. Where have I got it? Just got to find it now, don't I? My charts. So I'm on a 5-minute chart. So that was the open. Obviously, it sold down. It pushed through the lows. No, I want that. This is the SPY, sorry. So it's pretty much going to have the same shape as the ASX. So you can see it pushed down, and about here it just started consolidating sideways, only over the, probably 30 minutes or so, or 20 minutes consolidating, and then boom. Now that there is not normally if you get this sort of push down, it goes in waves and you get a bit of a pop and you get a lower high and then come down. It's a bit more controlled. Now that's not controlled at all. The way that's sold off is just showing that there's no one on the buy side in the SPY. They're not sitting there. And the same in the market on the ASX. There's no one sitting on the bid just to know, we'll soak up the pressure. The less people there are to soak up the pressure, the harder and faster it's going to go down. And if no one's willing to soak it up in the ASX up at these highs, then to me, it's a sign that potential weakness or maybe fear starting to drive this market. Who knows? I think it's just a few things we've got to watch out for. The change in dynamics, especially today, the way it's sold down. There is, and this is on the SPY, there's a little support level around 66.12. It's just touched down there. And a lot of times they will gun for certain levels, try to find or search out we call liquidity zones, liquidity and buyers. So sometimes it can get overcooked. The Aussie took a bit of a nosedive at the same time. You can see that it's about 11:15. Was it exactly the same time? Which I'm suspecting drove the ASX down. Aussie continues to come under pressure. Had a bit of a pop at the start of the day, then boom, straight down. Really took off hard. There was news out that I think China, not retaliated as such, but talking up whether or not there's an article, I think, in a Chinese newspaper, whether or not it's even worthwhile continuing negotiations, because they get out of negotiations just recently, and then Trump comes out, tweets, bang, we're going to raise 10%, and then he turns around and says we're going well. It's just such conflicting news, and it's from what's coming out, and I think it's getting to that point where people are probably just getting a bit irritated or a bit over the fact that markets getting moved on news. So we're probably settling in the fact that, or just previously, that okay, it's going to be a bit of a drawn out process on trade wars, and yeah, okay, tariffs, they're crimping growth in the US. Trump is still saying that they're making money, but all the academics and the economists are saying no. Since 2000, it's proven fact that 2017 the prices went up and consumers were paying for the tariffs, not Chinese. And he's probably come up with some more reasons why they're paying, but it's a political thing for him. So he's happy to have the trade war going and spruiking out the news, whereas I was going to say there, China are just sort of. I think China are quite good the way they're, or the way they tackle it. And if they're, but the problem is if they're talking around saying what uses actually continue negotiations, then that doesn't bode well because what's Trump going to do? He's going to come out and probably raise tariffs, and then of course if they're not going to bother, if they aren't going to go to negotiation, then China's going to come out and sort of it's going to blow out of proportion, and I think that's what's concerned people. They got into a nice little groove where there's no real news coming out. They were putting together. They're going to have meetings, going through the meetings, trying to sort out their differences. They've got some sticking points. That's fine. There's always going to be sticking points. But then Trump comes out and throws a bomb every now and then. It's probably got more to do with interest rates. He wants them lower. It's a fact. He just wants them lower to try to help the US dollar and buoy the economy. Yet if the numbers are not there in weakness, the numbers are starting to slowly. We're expecting in the US, everyone was expecting weaker numbers, but they're coming out better than expected. They are slowing down, showing slowing growth, but not as bad as what they thought, which means they've just cut rates. Potentially the further rate cuts are not on the table. Now, when Trump comes out and says about tariffs, he knows that raising tariffs is going to crimp growth, which is probably going to slow the economy faster and probably going to have to cut rates in the US. So he can sort of come out and manipulate it with his tweets and muck around with his tweets to try to get the outcome that he wants. Problem is, it's really going to start killing the market because I think the market's getting to that point where, well, potentially, when you keep ticking over the new highs and the outlook gets harder and the volatility starts increasing, yeah, it makes it tougher for buyers to come to terms with jumping into the market. I think, and it's going to get to that point where, okay, let's just go back here. When you're down here and they talk of trade, you go, okay, no worries, it's an uptrend. Buy in the dips, things are still looking okay. But as you get further extended, do you really want to buy the dip anymore? And you're up at all-time highs. You just rejected all-time highs. Do you really want to buy the dip? Are we due for a major correction? Because this has been going up for pretty much start of the year. Bang, January 1, up she goes, and it hasn't looked back since. It's been holding higher lows since. So the higher and higher it goes. I mean, back here they were talking about potentially there's a bit of a correction coming in. Hasn't corrected here. Didn't correct here. Didn't correct here. And we were talking all the way up. This is going to gun for new all-time highs. And it's a matter of what happens when we get into all-time highs. At the moment, we're backing off. We still got key support on the ASX just around. Actually, I'll draw this up. We haven't broken down just yet. And that's the important point of difference to the move back in September. I've got that. Oh, so here, you can see right on the left-hand side of the chart. Let me transition that. I forgot to do that, didn't I? Okay, so right here, nice big arrow. You can see wash out the highs. Let me just draw it up. We've cleaned out the highs here, then backed off. We started accelerating, so it was only up until about this point when we did it in that one day. That one day it sort of pushed out and finished on the lows, just breaking through that little minor anchor level. I want to make that bigger, don't I? I just want to make that slightly a bit more. There we go. Let me draw that again. G'day, Gino. Hope you're doing well. If anyone disagrees with me and thinks something different or there's something I might be missing, just point it out. I'm not the sharpest tool in the shed. I just got my theories of what's working, and it's more got to do with supply demand than fundamentals or macroeconomics. You know, just what I'm seeing on charts, and it's sort of supported by fundamental views or macroeconomic views. It could be a lot. I'm not an engineer by trade, not an economist. Never done economics in my life. It's just what I've learned I learned on the job. So I might be missing a few big points that someone out there might know, but please tell me if I do. Feel free to type it up in the chat, and then I'll delete you out. So what I'm saying is that this here was different. This action was quite, grand. We were talking about this level here. This level here, when it broke, it was a bit of a heads up. Then we popped up to the highs, washed out the highs, and then fell over. And it was on this day here when we traded below this low and sort of broke that anchor to the uptrend. So once you're breaking that, then that's where we got that acceleration lower. And if you get acceleration lower, it's no longer, it comes at a sort of every market can wash out different levels. And you got to realize that you don't want to get caught out 2 points below. Okay, I'm going to take off my everything I've got 2 points below because it can wash out, bang, up she goes again. And it doesn't have to be. I know we talk about finishing below a certain level like we did on this day here, close below. The next day it could just open and go straight back up, and it's more of a washout. I would categorize that more of a washout. But as soon as you get the market opens and goes down the next day or the next trading session, it is weakness. And then we've got at that session we've got this type of movement, and that was leading to a massive sell-off that we had. And the rest is history. It sort of come, tested the breakout zone, and then down she went. Here we've got our support around that 66. So we could accelerate into it and still hold up quite nicely and then start to build. We may find that today we get bought up into the close and then we chop around here and then start to lift again. And we do trade through all-time highs. We don't know. But it's just this action today and the lack of buying around that I'm seeing individual stocks as well. It's a few of them are starting to take off. You can see people just starting to take off and ease out, or there's no sort of buyers really to soak up that selling liquidity at that, and it's just looking like the pressures is starting to build. And like I said, the high, once you get into the all-time highs, which is probably about here, whoop, make that a bit straighter. Pretty much, I'm a perfectionist by trade, somewhere around here. Popped up, ended down, and the following day we've sold off since, breaking into those new highs. So now we're at that crux. We've just got to keep an eye on it, and we've just got to be careful that this, if we can hold up here, pretty much I think we need to hold here. If we break down and say test down to say that 66.20 or so, that support through here, then it's a bit like this breakthrough. And then we've got to just, I think there could be a few concerns about, longer term positions and whether we go this, we correct this leg up. We haven't corrected this leg up. So whether we just, sell off something like this, start to edge lower, and then we'd be looking for that same, longer term. That could take a few months to half a year to play out. That sort of major correction and really clean out a lot of this buying from this bull run we've had all year. But yet, it's yet to be seen, and we still, I think we'll find out a bit more information by the end of the day. And over the coming days, if we have a bit of a bounce, what the US does tonight. Now, just talking about the US, on the flip side, what we said about Trump just before, him trying to, talking down the US dollar, and he's only really got tweets. Yeah, look, it could do. It could do, John. But generally, people, it's times like, I feel it's times like this, if fear's starting to grip, people are watching it no matter what, and you can always trade. So whether it does dry up liquidity, we'll see. It was the same about Trump, yeah. So the thing is, if the US are now starting to focus on further rate cuts, it could provide some support in the US, hence provide some support over here. And we may just be seeing that accelerated move down. I mean, China opened, so the Asian markets opened today and they got sold off a bit. Then the comments from China come out today, say around that 11 o'clock mark, we got belted a bit. And I think we got more belted because people are just not willing to buy up at these levels just yet, especially when the market's been heading down the last few days. Whether or not is fear going to start driving the market lower, we don't know that yet. Whether or not you get some buyers willing to soak it up around that 67 mark, whether we get a bit this move down today, we're down 83 at the moment, is a bit overcooked. All these sorts of things are yet to play out. Now, I'll be concerned if we sell off into the day, or we do something like this, we sell down to 60, this support level. I'd be a bit concerned if we do that tomorrow. We could go straight down from there. We could bounce and do the same sort of thing we did, was that back in August, end of August, start of September. And then I think we'd be looking on the short side, especially on the indices, for some sort of short play on the index as either a bit of a hedge or a full out, just going a bit more heavy into the short. Because I think if this corrects, it could be a good correction. It may not be all roses like we see, controlled move down. It could be, if it's fear driven, anyone that lived through the GFC and traded through the GFC, you can forget about technicals a lot of the time and support and all this sort of nice little patterns that's set up. The market just gets caned, and it can get caned off a whim. I remember that. I don't know if anyone remembers. I think we've spoken about this before. I can't remember the company, Storm, when the markets were selling off. It was mid GFC sort of thing, and Storm was index buying fund, They just bought the index. If it pulls back, they buy more. They leveraged up. But it got to the point where they can't factor in a black swan event, and that's what was happening. The markets were selling off, and at this stage, the markets were quite tame, I guess. We'd gone through a big period of sell-off, bounced a bit, and the market on this particular day was quiet. Nothing much been happening in the US for the last couple of sessions. It was quite nice. And then in the afternoon, boom, dropped 200 points. It's because someone unwound the leverage book for Storm, and I think it's ANZ, Macquarie, or whoever it was, and that just caused capitulation. And that's got nothing to do with technicals, or even fundamentals. They weren't too bad. It's just ANZ said, we've had enough. We're getting rid of our loan book. We're closing out, and we're closing out at market. And they just crucified the market, and it dropped, bang, really quickly. So that's when fear can drive it. There's no real, you expect some sort of reaction off a support zone, bang, straight through. So that's what could be a concern. And that's because we're up at highs, and the US is into, they're just coming off all-time highs. They got headwinds, they got massive debt, all these sorts of things. And they're looking to rate cuts as being further rate cuts have potentially buoyed the market. But, more rate cuts is not a good thing, I don't think. And it's hard to, normally rate cuts come about when the market's heading south or they're overcooked and they need to be cooled, and then they can cause the markets to go down. Whereas they've already rate cutting when the market's going up, and people are looking to find that as support. It just doesn't make a lot of sense to me. But look, we'll see how the market goes. There you go. I've been talking for 24 minutes just on the ASX. But what's everyone else's opinion on this market at the moment while I have a sip of coffee? Don't forget the safe haven. You look at bond yields going down in Europe and the US. That's the safe haven buying. Gold. What is gold actually doing? No, I'll see if I can get gold up still. Spot gold. Yeah. I know a lot of people have been in cash. Um, I'm more inclined to, I find it hard to be in cash. Look at gold. What am I on? I think I'm on the 5-minute chart. It might be on the 5-minute chart, but look at that. That's actually really bullish, that sign. That 5-minute chart, I think this is going to just about trade through those highs. So if it hasn't already, we touched on there pretty much, in this last half an hour. So we're getting overcooked. Like I said, when the market wants to go up, it could stay overcooked like we were, back here. It retraced off the highs, reacted a bit lower, 14.17, and stayed overbought right up until we got up to about, $30 rally. So easily this thing could just go on. So yeah, safe haven assets are getting bought up. Gold, gold's not going to come down, I wouldn't think. Even when the US dollar's rallying recently, you had that little spike up in the US dollar, gold didn't really move. And when it sold off, gold moved. So the bulls are still out in gold, safe haven buyers are still out in gold. And that's not a good sign really, but for gold, it's a good sign. Yeah, bonds are going up, safe haven buying. You're buying bonds with next to no yield on them as a safe haven asset. It's kind of weird. It's more of, they're not looking for yield as such. They're just not looking to, well, you can call it, you're making yield if you're not losing. If you got share or you got a whole lot of risk on into equities, and it has been risk on for a long time now, if there's more and more money flowing into bonds, not, like I said, not so much as a safe haven because there's bugger all yield on it. It's more of just parking your money in there and not losing out, and at least getting something for your money, rather than, you're only going to do that if you think the market's going to tip over. If funds are just starting to push money across more. But that'll be interesting to see how it all goes. So I think we've got caution at the moment. It's key for me at the moment. We're down 83 now, so we'll just have to see what happens over the next few days. Like I said, if we can hold up around here and not get too much further below here where we are, I wouldn't want to see us down 100 by the end of the session. If we sell off into the close, I'd be a bit concerned. And I think if we do something like we did here, if I've got that picture still up, just here, be very careful. I would suggest to be very careful, because this is the kind of thing that will, and when we start bouncing, you get a couple of green candles, it suckers in those bulls. And people, I always said this, people are either bullish or bearish. Not there are some people that can't get into a bearish mode, and some people just can't get into a full bullish mode. As soon as they see sign of weakness, the bears come out again. The raging bear. You're better to, if you can, just sit on the fence and try to analyze both sides of the market, because that's trading. It's not trying to pick a view. Well, you're not trying to stick to a view. You're trying to analyze as it comes, and then okay, if it starts to look bearish, then you ease off and risk. Starts to look bullish, then jump in. These sorts of things, when they build up, that little breakdown and you start to pump back up, that brings in the bulls. But I think anyone that's actually trading would be looking at that going, okay, 9 times out of 10, a little break of that rising support leads to a sell-off. And I know that the market can easily go wash out the highs, because it just does that time and time and time again, and especially on indexes, especially on currencies, because they know that if you're trying to edge out of a massive position, you've got quite some positions in that first little breakdown, the market pops up, you're going to be selling it and just let them. You won't go heavy. You go light. You're just selling to the pops, selling to the pops, selling to the pops to try to get out of your position, get out as much as you can at a better price. When it starts rolling over, that's when it starts getting heavy if you haven't finished getting out or scaling out of something. And that's why you get the sell-off. So there are the bulls that will jump in and say, oh, look, we're going back up again. They sort of negate the early signs, or they forget about the early signs. And that's what I'll be watching for now. There's that early sign off. We do pop down here. We've got to take that on board. We have to take that on board. I mean, yeah, we could pop back up to all-time highs again, and then the bulls will be going, yeah, we're up to all-time highs, but I think they're going to miss that minor point. And then you might get that second wave of selling, really drive it down like that. When we don't know what's going to happen, but I think it's really about being careful just at this moment. But then again, saying that, the trend is still up. Yeah, let's just take a quick look at what's happening. Let's make that a bit smaller. I just want to get there. No, I want this to get back here. Big S&P. I mean, a couple of bad days. That's your S&P. A couple of bad days on that. The trend is still hasn't broken at all. You sort of miles up. It could be sitting on the MAs, longer term MAs. Has gone through on the daily, but on the weekly, it's just sort of could be sitting back on that 2900. Could head back up again. Again, have to wait and see. Dow, pretty much the same. FTSE's looking a bit less likely for the bulls, or less nice for the bulls. You can see that market's pressed up. We didn't get up to the all-time highs, but this big reversal week after we popped out through the highs, boom, straight back down again. And they've got Brexit issues coming out too. It's going to be a bit of a problem. It's cause for some more negativity probably. Yeah, that candle on the weekly doesn't look too crash hot. Look, it happened up here, trading to the highs, brought in some weakness. Again, weakness could easily come in and be a bit more controlled like this before we get a big sell-off, or we may not get the big sell-off, just grind low and then pop back up. It depends what the overall market's going to do. I think a lot of it just depends on the sort of the fear in the market. That's a FTSE. DAX, big reversal week as well, big down there. So opened down on Friday and just headed south all day. So that's starting, that's looking heavy. The key level really more longer term is down around that 11.6 on the DAX. But that has probably broken down too. So that's that uptrend, I think, is just being broken. So there's probably early signs there just to keep an eye on. So see that. So this little uptrend here, yep. So that's broken. So it's just, DAX too, be careful. So really for me, this move up above the previous high is just a wash out, a clean out the highs. Potentially the bigger boys are exiting up there while people are buying, and then boom, down we go. All right, let's okay, Casey. Let's get into some stocks now. So we've got a few. Casey's put up a few FND, KR. Is it KRR? KRD? 22. Is that a US one there, Casey? I'll have a look. RDFN US stuff there. Yeah, no, good work, Helen. So Helen's comment there was, I know she's been posting there on the forum we've got going as well, so that's good. It's good just to, anyone that doesn't know, we have the Discord channel going, which if you want to join that, just email support@tradesetup.com.au. We've got this Discord channel. We just sit there and talk. So when things heat up, you get people start talking a lot more on there, and it's good to hear everyone's opinion. Where am I? So yeah, talking about, so put in some stocks and we'll get into those. Yeah, you got some small resources are moving, except what I've got. Now, just touching on that, you had some capital raisings and corporate actions. It's heating up a bit, and as it would when you get up into all-time highs and you really get extended. The corporate actions always pick up a bit. It's easy to raise cash, You could say raid cash, to raise cash. But like we had on LCK, we got out about here. There's a capital raising at 22.5. Now stop was at 22.5 too, I think. Now that market, this is just a bit of a heads up. A lot of the time, the capital raising, if there is a capital raising, then I tend to 9 times out of 10 not go back to that price, even through that price, because there'd be a lot of people that bought up in the capital raising, and the stock could easily get held up. You can see this action brought in the bulls. It brought in us, this little pop up, high low, looking good, green candle, and then really did not much. Held another high low, touched on 30. We got in around 28, and then started heading south. And that price action was just weak. Every time something come up in the bid, someone bought it up a bit, bang, it gets slammed down. Not a lot, but knocked down a bit. There's someone coming with some good volume, and then they might sit on the offer and then do nothing after that. So they weren't ramping it down; they were just capping it, capping every sort of positive move up. So someone somewhere knew what was coming out. We could argue black and blue, but people do know what's happening. Whether they're shorting into it, taking a short position, expecting it potentially, or just, if you're buying up in the capital raising and you know that's coming at 22.5 cents and you're happy with a gain around 27, 28, yeah, it's a good percentage gain on that. It's a really good percentage gain. So you could be short into that. We know when the cap raise, if you're locking your price, if it goes high, it doesn't matter. You're happy with the gain. If it goes low, you're not going to lose out too much because you've got your short position, and then just close them out and lock away your gains. So capital raisings, a lot of the times they will go back to that cap raising price or through. So it makes it hard if you're long that, but it's always important to take note of the price action and especially on the and look at that. If you can see them stacked up at 30. That's been there for days, weeks. As soon as it got up there, they just stacked it on the offer. So anyone that's buying into it makes it really hard. But what they were getting is that positive price action. People are starting to put bids in there, and they just keep selling into the bids a bit, backing off, selling into the bids a bit, backing off. So looking at the price action, it just wasn't looking great for higher prices. When we could have potentially closed out a bit earlier, but you don't know what's coming, and this could happen time again. And then good news comes, pops it up, and it's some expected good news coming out too. So if you know what the fundamentals are doing, you might sit there and hold off. If you see that kind of price action, you just see, you don't know what's going on. You never know. But when it comes out and you do get a capital raising, my view is it's going back down to the cap raising price more often than not. I mean, like I said, 9 times out of 10 or 95% of the time it's going up. Sorry, it's going back down to the capital raising price. Good, bad, or ugly, because you're going to get more liquidity come into the market. There's always going to be people, especially the way the market is at the moment, is a bit negative. There's always going to be people who are going to, okay, that's it. I've got a good price, 22.5 cents, trading 25.5. I want out, book the gain, call it a day. I could always get in if this thing starts to look good again, but at the moment it's not. I'll just take the gains and call it a day for now because I'm a bit concerned about the overall market. So that, if you do see capital raising, just be careful. If you got something there, I guess it comes down to what the story is. And I think normally when I got a cap raising, you got that liquidity. It's going to be around for a while, and they might be selling into any pops. So it makes a shorter term trade, I guess, turn into a very long term trade. It can do easily, or you might have to come under pressure for quite a bit. I've got a couple now that capital raising and bang, it's below there now. So I'm underwater. I still think the stocks, they're little ones. You don't have a lot of exposure to them, but I still think the stocks are good fundamentally. Problem is, you don't get much of a chance sometimes to actually get out. So that's another thing too you to be careful of. All right, let's just get into some stocks now. All right, what do we got? Let's have to scroll back up. Yeah, there's some small resources. I was gonna sneak into something. Uh, and there's also a few. This is just when you get to the low end of the scale. Be careful of a few stocks that tend to get pumped up, and they do. They get pumped up. There's groups on Twitter. You'll see them. You know, you get 5 or 6 guys you follow, all always saying the same thing, and it always comes out saying the same thing at the same time, and just they're pumping it. They got 1,000 followers each, so they'll pump up these stocks. You'll come out and see it just bounce up, looking really good, no news out, and then bang, capital raising, saying, "Oh, we're going to cap raising at the average price, which is below," and then bang, straight back down to that price more often than not. Especially with those small ones, it happens all the time. All right, let's get into some stocks. Like I was saying, so we start off with RDFN. Is that the US? Let me have a look. Uh, what is it? Redfin on Nasdaq. It's looking okay. It's in a downtrend. Longer term, it's in a downtrend, but it has bounced off, sort of consolidated. And there's a higher low compared to this low down at 1530. Entry at 1976. So you're looking to enter above there. Is this some sort of, Casey, is this something you're following? I know there's someone else that was getting on with the same style. It's just a trading technique. All right, that looks okay. Could kick up. We'll probably stick to the ones that FND. Oops, that's not the one, is it? Finders resources. No, so it's the US. All right, we'll get to the Aussie stuff first, and then get onto those. All right, so we've got WAF. We put up WAF. WAF, Gino. All right. Like a lot, a longer term weekly, it's starting to get a bit extended. Let me just check out what they do. West African Resources Gold. Is it? Yep. I was getting a bit of a lift. Company which focuses on acquisition, exploration, and development. So it's not actually a producer. It doesn't look like it. Unless they are, just let me know. So that's getting a bit of a lift by the share price. Get up there, get up, get up. Finally got it. So it's sort of a key zone around the 20 mark. You could say this is not really a high low. It's been traded down into that 19 to 21. Big push up, straight back down. It's kind of volatile. It took out the highs and struggled. That was really a washout. It come all the way back down, touched on the support zone again. And we're starting to lift. We are getting a bit extended, and we'll have to keep an eye on this because it's sort of at that 39 mark longer term. It's washed it out, reacted. So it, whatever day that what week it was, it popped up, traded 40, finished below those highs. Next day reacted down. Sorry, next week reacted down. We're back up there now. So potentially that's going to be an area concern around that 39 mark, 38, 39, 40, that zone up there, which could find some selling. We are extended up here, so the buyers are giving it a good nudge from, say, that 28, pushed it up, couldn't get it just to finish above, which is always a positive sign, finishing above that zone, then it could bring in the bulls the next day, but instead it reacted off there. So we'll have to see what it does, this week, next week, and we'll look at the shorter term time frame. But either way, on a weekly, it's had a good run up off 21 to 40. We nearly doubled in price. So anyone that's looking at, if you got in early, 100% going, you might be looking to take it off up here. You might be gunning for 45, but you probably have your finger on the trigger ready to get out if things start heading south, because you have got this, especially the way a couple of weeks ago, the way it reacted off it. If if you bought it in this region, you're probably a bit more concerned. I mean, you're still sitting on gains. Anyone that bought it higher would be a bit more concerned. The daily itself is up. It's just, if you measure this leg up, it's probably equal to that secondary leg up. So it's a good zone where we might find some selling. If we struggle, if you see the price action struggle around 39 and we get a pop down again before it can't even get to 30, and the volume, let's just see what the volume is doing. The volume a couple of days ago was quite good, but it was a negative day. So the volume's picked up on this lift. It picked up as we got to the end, that run up as well, before we saw some sort of corrective price action, more sideways than anything. Consolidation sideways before the secondary leg up. We've got that secondary leg up. So it's just a question whether we're getting to the end of that leg up, or whether it's just going to continue on straight on through. Now, I think continuing on through, considering the weekly, is a tough call, because it's, again, coming down to that infinite or finite number of traders that are willing to buy it up. And if you're watching it, then again, I mean, in saying that, if it can be bullied up through there, lack of liquidity too, it could actually spike quite hard. It's just, probability-wise, when the weekly's extended and then you start getting the daily reacting around that 39 zone, if it does, on no sort of volume, and starts to head over, roll over, then you'd be concerned. But at the moment, that daily's heading up. If you're in here, fine. I would be having my stop display 35. See if you can get up, but be pretty conscious that it is getting a bit kicked up. A bit stretched. Just traded 39 now. So what volume was that? Less than $2,000. It's not a lot. Once it just pushed through, what was it, 38 and a half? Might have just gone through. Yeah. So it'll be interesting to see what news has come out recently. Quarterly might have been all right. And I think it's, for me, that's looking more of a gold, rally on the back of gold. I mean, yeah, it could keep going, but I think as gold gets extended, you can be wanting producers, not developers or miners. You want producers. Yeah, no, good work, Jenna. All right, what do we got next? Let's just see where the Aussie is. I just want to see what's going on. 96, not looking great. We're just down 96 at the moment. SPY, it just keeps heading south, so Aussie's bounced. Get a bit extended up here. This could be another move down. I'm just going to keep an eye on that in the Aussie. It has a bit of a, you've got that head south, bounce, tries to go again, react back off there, little minor double bottom, deeper pullback to the MAs, could roll over quite easily from here, but we'll see. Wouldn't expect it to get all the way back up here again to 68. That SPY is just boom, down she goes. 96. All right, I think really keep an eye on that index. All right, what do we got? Lauren M7T. What are they? Mac Technologies. Small market cap, 70 cents. Hasn't even traded today. No, I'm an idiot. It has traded today. 200,000. Not massive volume. Good volume in this run up, which is good. On the weekly, it just may need a deeper correction. Who knows? May need to be more concerned with that weekly chart. I mean, if the daily starts picking up higher lows there, then that could just keep extending, and that weekly sort of means nothing. It could run up to that dollar mark and have a test $1, so on. It'd give you what, 20% from here, 20% gains. But it's that weekly, when you get something like this, you're going to get whoever got into it initially, great, and they got that run up, took some off, took some risk off. Probably not going to buy into the second half because I've already got another. If they've taken everything off, they're going to want some sort of corrective action, some decent corrective action to buy at low again and start to edge in. Anyone that's missed the boat on this first run up, that's where you get the fear of missing out, the FOMO, that they're going to be buying here, and then you get squeezed out. potentially bought it back up. They might see a couple of green days, okay, I'm buying, and then it could be just all that fuel that gets squeezed out of the market if there's still some buyers in here that are wanting out. Considering today we're just about tick over down 100, just about. So that fear could squeeze more people out of the market. So it's just a good idea just to keep an eye on the weekly charts. But like I said, if you go from overbought to oversold, it's taking a good squeeze out of the buyers. If we pop back up and get sort of overbought again, and we're nowhere near 90, I'd be concerned it's going to be a major lower high, and that weekly is going to come into play, especially if it can't get through 80 cents. I think 80 cents at the moment is key on that one, Lauren. If we get through 80, then I'll be looking for some sort of consolidation, like we always draw. Let me just grab that. That's a big run up. The only consolidation you really had was just above 40, through 40 to 50. So it's got a long way to pull back. We pull back to 50. Where's that? 50 is about where you're going to be sitting on top of the EMAs on the weekly again. So it makes a bit of sense that some more heat could come out. I think that's an aggressive. If the market's bullish, yeah, I would be inclined to just worry about the daily, not the weekly. But the fact is, the market's bearish at the moment, and we've gone from about down 20 points to nearly down 100 today. That's unusual. 100 point down days are quite unusual. So it means that maybe fear's starting to jump into the market. People are getting a bit concerned. They're getting sick of being long and getting squeezed out and so on. Sick of trying to have some exposure and getting squeezed out. So this could be a bit of concern. But if we get this move, I'd sort of look at that as one move. And this is at 80. If we pop up here and we can get through 80, say, actually, let's just draw that properly. So it's sort of come down, it's chopped around here, and then it's come down. So what I'd be looking for, if we can get it up through 80, and then do a different color, you can start to hold a higher level and you get that rising support of higher lows, then I'd be looking for some sort of entry. And you want the time to go past as well. Time's quite important. The time that it holds these highs is important. It's just showing bullish strength. And that's one thing I think people don't take account of too much. And it's all about caution. It's all about, picking out what the market's doing, taking a bit of a view on the overall market. Is it worth chucking some risk in there? Okay, if it is, great, go for it. If it's not, yeah, I'm probably a bit more cautious at the moment than what people would like, but that's the nature of the beast. You can always short a market too to make money. So ISX, I hate you bringing that one up. That kills me. We were looking at that way down here somewhere. That's extended now, so you want a sort of a healthy correction lower, and you want to see. You don't just want to see a correction down like that. You want to see something that's, is going to find some buying on the way down. That would be ideal, and then look for those high lows to start to play out. That's ideally what you'd be looking for ISX, because again, it's one of those ones that have been going up. I mean, look at that. It's just boom, straight up. Hard to would never go near it up here. I want some sort of I want some people put on the sidelines. I want it to squeeze out. If you can spend enough time squeezing people out, that's actually holding up near the highs, that's a good sign. When it squeezes them out, if this comes toppling down, and we talk about squeeze out, but it comes through 60, that's a different sign. That could be a major correction, especially on the weekly. But it's that 60 zone which is key at the moment. Look at last time. This is not as clean as what we saw. That little pop up, comes back down, consolidated over the period of about a month, and then took off. Consolidated another month or so, popped up, straight back down within that month, back down to sort of that support, popped back up. It just seems that the sell-offs are coming a bit deeper, a bit harder, meaning that we're running out of buyers to keep pushing it. So, yeah, just be wary too. The market trend is definitely up though. Nothing to argue about there. It is stretched both on the weekly and the daily too. It's been stretched for a while on the weekly, so just those little things, whacking your risk on it, something like that, might be a bit iffy, but we'll see. EFS, Echo Fiber. I mean, this could be all fundamentally sound. Like I said, I have no idea about what they're doing. fundamentally could be a cracker. That's got no. Don't like the way it's popped up into new highs, finished up there, and bang, straight back down again. Strength is not when it comes back down to retest the lows off a spike. That's not showing strength. And this because it's not that old. Or was it floated somewhere around March, end of March, start of April? If you come onto the ASX then, it's only really a few months old, and there's going to be, initial. There's been really no reason to get out just yet. I mean, this is squeezed this action through May, June, squeezed out a few people, then it started to pop, maybe on news. Let's just see. Quarterly's there. Quarterly, any news before market update. So it's the price being ramped up a bit by a couple of news releases, something, a couple of good things, get it going. The euphoria is still kicking in. But this move here, I'd be questioning that. I mean, a double top normally leads to a decent correction, but it's still got to break through 280. If it can't break through 280, okay, forget about the double top in a way. But you still want to see this consolidate around 3, even above between 3 and 320 ideally. I wouldn't want to see this today push down below that low of 293, because then you've pretty much got 275 in sight and retesting this low here. And then I'd be more inclined to believe the way it's reacted off these highs, that it's going to break that level. And it may have to have a deeper correction, reset, and then go again. But that'll be the sort of the first time it's really broken down. I mean, back here when it popped up, a few days later, come back down and retest, then took off, didn't break any level, come back down, didn't really break any level either. It's consolidated sideways, higher lows just at the end, and started to take off. Pull back, pop up, lower high, come back down and retest, took off again. Went through the highs, next day straight down. So maybe it's getting to that point where anyone's got it the IPO or bought it here is one out, booked the gains, while they've got a chance potentially. If good news is going to come flow through, then so be it. Could continue on, but you want that price action to play out. At the moment, I would like to see it through 330, consolidate here, pop up through 330, pull back to build the high low, and that's just that minor high on the 1st of August, the high of the day for 1st of August. I want to see that because that's sort of your first resistance zone where any of the selling could be breaking down. It could be something like this. Popped up in one day, comes back down, retests this low, holds up above 290, and then starts to lift again, and then see what it does from there. Yeah, there's always people pushing something, isn't there, Alan? ASX, I think Trade Direct had that. I can't remember what they called. ASX. I signed this. I always stuff that up. Insignis. I signed this. Good. They were building. They got a couple of good contracts on, which helped them really kick off. But yeah, again, it's going to get to that point where buying euphoria runs out. It needs more news if it's going to go to highs. Otherwise, there'll be some profit taking coming in. So yeah, if it keeps continuing to be pushed, any of the brokers pushing it, probably selling. I don't. Yeah, I think brokers, and I was one a while ago, you'll push it and push it. I mean, they just tend to keep pushing and pushing and pushing until it cracks because they're getting told that fair values could be up $1. Yet they forget about what the actual market wants and needs and wants, what's happening in the macro environment. So we'll see. What the other one? VLT, NZS. We'll have a look at that, Magna. VL and John. So VL Vault Intelligence, a very small one. Not much on the offer there, but doesn't mean too much. No volume really, considering the volume that come in with this push up back in August, September. Nothing around at the moment, and it's cleaned out a lot, which maybe not a bad thing. It's just whether this volume have got back out again on the way down, but that volume on the way down, it's quite light. Consolidated through sort of that 15 to 20 mark, started to lift again, obviously on the back of news, high value contract extension with Cornerstone client. Vault 6 million car with record high Q4 growth. So good news has lifted it, but again, what's that? Sell off into the quarterly. What's that? So that's it. It's had a pretty savage sell off, that 37.5 mark. So you don't want it to get through, what's that low? 24. You don't want to get through 24. It goes down to 24. It's looking more and more bearish to me. A bit like this. You want to see it hold up. Buyers starting to soak it up around, 29, 30 mark. If you can get soaked up here, sit on top of the MAs, and start to get a couple of green candles, only minor, it looks like that selling's come out, or whoever wanted to sell it is now done, finished, it's over. And the buyers are starting, if the buyers start to lift it again, you might get a higher low, you might just get a pop up. Saying that, someone just nailed it down to 28.5. So yeah, you don't really want it to get lower than where it is now. And you want to see some sort of volume, but that's not much volume at all. 1.9 million shares. It actually is a bit, isn't it? Got a couple hundred grand. But you want to be that a rally supported with a bit of volume. If you don't get much volume, I just think it's going to be fairly thin. It could come down quite hard, quite quickly. Hard to find some good ones. I'm not sure if everyone's finding that, but just I keep going through the scans, jumping around. I'm just not finding anything that suits my style a lot at all. There's some big stocks, market cap of over $1 billion and more, which are looking potentially ready. But if fear drives the market lower, they're going, no matter what they're doing, they're going lower because they're going to get dragged down by the ETFs, dragged by the index sellers, dragged down by the funds that are readjusting, all that sort of stuff. So I think there's no real protection from major sell-off, major fear-driven sell-off in some of those big ones. And they have, a lot of them potentially are set up. They've been going up for a while, so from pretty much the year. So I'm finding it hard just to find something that is worthwhile at these levels with this sort of market activity, with the headwinds we're seeing. I throw my money at, and I'm happy to sit on, especially for the alerts as well, sit on the sideline and don't jump in too much, because you start loading the boat and there's a fear correction. Forget about your technicals, forget about your fundamentals. It's probably going to be a big sell-off, and you get caught on all your stops. And it's just not worth it until the market shows us some reason why we want to jump back in again. So that's Volt. And yeah, is not too bad. That's not a bad pattern. I mean, this action recently is just sitting on top of the MA is good. And it's got some volume. You can see that volume. Was that Friday, on the 2nd of August? Yeah, Friday. Good volume popped up with this rally, and that's off the MA. So that's a good sign. Some good volume come through here, lifted it. More good volume pressing it up. Pull back, sitting on the MAs, all technically looking good. Higher lows. So you got the sort of key lows around 10 cents. Higher low around the 13 to 14 mark. So longer term, it's actually looking pretty good. It's potentially that squeeze. We might just be running into a bit of headwinds just here, but we'll see. Weekly doesn't look too bad either. You got key support, 10 cents. Okay, resource, you got that pop up, pull back to 10, took off to 40 cents. That would have been an awesome rally if you held that then. Straight back down, which is not always a good sign. 10 cents. Lifted to 27. So that's a good little pop. But you're concerned that after this sell-up, there's always going to be some sort of concern. So that's why you're better off buying on a key higher low. And it's just built that around that 14 cent mark. Pull back, sitting at a higher low, which is not too bad after you get a major support zone, a major double bottom. That ideally would lift us the length of that move up from 10 to, say, was it 27, 17 cents, add that to about 13. Was it 20, 30 cents, somewhere around 30. We could even have a good little run up to the highs at 40 off the weekly anyway. So the weekly's shown some good signs. It's not uptrending just at the moment, but the daily's uptrending. Your weekly is a bit stretched up here, but like I said, the weekly could stay stretched for a while. Can even get that divergence while it's still going up. So really, you just want the structure in place in the weekly to support a daily move up. And the daily is looking okay at the moment. So I mean, if you're in, I'd be having my stop below 19, 18, say, at the moment, and just seeing what happens, seeing if we can react up. Today, like I said, 99.9 went down on the XJO, or the ASX200, so just about to tip over. Crack 100 points on the day. So yeah, I think, like I said, there's even some good stuff out there. They look, technically, this one looks okay, but I'm still cautious just because of the macro environment. Nothing worked. Basically, as a broker, when the GFC hit, we come in, see these down days, red candles, and just go, let's just go and have a drink, go for a long lunch. It's the only thing you could really do. Your clients might have been cleaned up, so you're not going to jump back in. It's kind of crazy when fear's driving the market lower. Yes, sometimes it's just better to wait and see what happens. NZS. Whoa. New Zealand coastal has been. Let's just get that news setting off. Just popped up. Listed on the ASX, did it? Oh, so forget about that price action before. That's 2016 and prior. What's it doing today? I'd say there'll be a bit of profit taking from the IPO today. Saw your comment, Al. That's true. 1 minute chart. Not doing too much. There's not much to look at there. What was the IPO price on that? Or what did it list at? Well, let's just see. In case it should list on the ASX. July, companies raised 5 million to fund their operation New Zealand Coastal Seafoods Limited. Recommends for trading on the ASX. What was the price it raised at? Maybe I've missed it, have I? It's on the first page. All right, not to worry. Yeah. So what did it list at? Do you know? Obviously raised 5 million capital structure and resist. 6 cents. Oh, they're options. Options. Data restriction 24. Okay. Options expires at 2.5 cents on the 25th of July. So that's today. What's it trading at? 2.5. Probably unloading some of those options. No, no, you're not. You're not unloading it even. Anyway, not to worry. All right. Probably call it a day there. Actually, I think we got through a bit. We'll see what happens with that. If you got in, I'm still curious to see. No, I don't expect anyone to tell me, especially if it's above here. All right. All right, guys. We'll probably call it a day. Like I said, thanks very much for joining me. Um, if you liked what I talked about, it'd be great if you could leave us a like if I made some sense. If not, email me at support@tradesetup.com.au. If you've got any questions, just feel free to chuck through an email, or feel free to send through an email, and I'll get back to you. Now, also, if you can't make it to a stream and you want to talk about something, if there's a share you're interested in, just email it through and I could look at it and you can review it later on. Yeah, like I said, the markets at the moment are looking a bit, tentative, and this move down, not looking the best. We're not really finding any support. That's a half an hour chart, I think, 30-minute chart. The 5-minute chart, we're getting sort of oversold. Just keep triggering down. So just be wary. Next few days, see what we do tonight, see what the US does tonight, see what Europe does. I suggest this kind of move down is going to create. I mean, Europe got smacked on Friday. They were playing catch up to the US because they closed at around 1 and the US sold off after that. But that's a big move down. That's a bit of fear coming into the market, a bit of, like I said, people are just getting sick of this news. They're trying to jump in, they're getting squeezed out, they try again, and sooner or later they just go, that's it. And less people going into the market, more people come out, and see those moves down a bit more stretched or a bit harsher. So yeah, be a bit careful. We'll see what the US does tonight. Look, all in all, the market might be due for just a serious pullback. We'll have to see what kind of move it's going to be. Whether this is it, we bounce back up into the close, great. We might end up only down 60 into the close. 30-point rally. We did rally Friday. I think we're 20 points into the close, off the lows, the day's lows, to end down about 20 points or so, or is it down about 40 or so more during the day. So that was Friday session. You can see that sort of grind back up into the close Friday. Whether we can do that, I mean, that's a severe sell-off. You probably expect some sort of reaction, and you see if you can hold the base up here and edge up into the close. If not, it's going to be a bit of a rough week. All right, guys, enjoy the rest of the week if you can, after saying all that, and enjoy the weekend. And we'll be back in on Monday at 12:30. All right, guys, cheers. Thanks for joining me.